Steven was on our channel 8 months ago to share his journey from trader to long-term investor. Today, we welcome him back to the channel to hear what he's learned as an investor the past few months, what's changed, and what stayed the same in his investing approach. Click subscribe to stay updated to more videos on investing. Welcome back to the channel.
Thank you, Daren. Thanks for inviting me.
How have you been?
Been fine if you are referring, let's say, to the stock market. We know that actually there was a crash since about 8 months ago. Now we are kind of like emerging, maybe possibly from the bear market, and hence you see the blue shirt here is maybe a bull, a bull in the black. So I think I'm doing fine as well in other aspect of my life as well. So financially, I'm doing fine. I hit a FRS and basically I have no loan. So the interest and all that doesn't really affect me. Interest rate doesn't really affect me. And hence, I think this gives me the stability in investing. When I see my whole portfolio, at this time around, it drops 50%.
Wow.
Yep. And this is the third time in my investing journey that it dropped 50%. The first time was in 2008. The other one was during COVID. And this is the third time. Yeah. So yeah, that's a quick update about myself.
Very turbulent, a lot of ups and downs. You are not alone. Many investors are in this journey, whether they are new or seasoned investors. You went from a portfolio of 10 stocks in the past, it was quite diversified, and you decided to concentrate on 2 to 3 stocks. How's that been playing out for you in the past 2 years?
Of course, it's never nice feeling to see your whole portfolio drop by 50%, and I think it's largely contributed by the concentrated portfolio. But apparently this time around, the third time I encountered this 50% drop in portfolio, it is like not much. It doesn't affect me much, and I'm still able to sleep soundly at night. So this is quite an interesting journey because I get to think about myself and think about what am I doing. So whether is it a concentrated versus a diversified portfolio, which is better. And I think that I'm still good for a concentrated portfolio. And I think it's good. So far, everything is well. Yeah.
I sense that you're more calm. You've benefited from the journey. As you mentioned, this is your third time the portfolio has gone down by 50%. In one of your recent posts on Twitter, you mentioned how if you're in a boiling water, you can't see things clearly, you've got to be calm.
Yep.
You've got to let go of the anger or the joy or the greed and be calm. How did you get there? Many investors are wondering as well. Right now, there's euphoria. A few months ago, there was deep sadness.
I think a lot comes with the mindset and the stability, be it financially or psychological stability that you have. So, for example, in financially, is if you watch Mr. Lu in 1M65, he will talk about the layer. So you have your CPF, all your emergency fund, all insurance covered. So anything above that is more like something that you can afford to lose. So with that mindset, you are less affected by the volatility of the market, and especially so with a concentrated portfolio. So that helps. And then also reading, I think reading from wisdom, getting from those great investors, this actually helps in the mindset because in investing, to me, it's a decade-long journey. And in that decade-long journey, there are bound to be, market crashes and all that. So you must be prepared for that. And once that comes, do not panic and stick to the plan, be it to buy or to hold that particular stock throughout your journey.
One of the stocks that you hold is Tesla. Can you walk us through your process on how you think about buying, holding, and selling Tesla?
Tesla is a very controversial stock. There are people on the extreme end that some actually condemn Tesla, or some will be on the extreme bullish part of Tesla, the stock, and of course the CEO Elon Musk. But I think that we should take a balanced view on it and take a look from the quantitative portion of it. That means whether the company, is it the revenue growing? Is it the profit? Are they growing? In fact, they are doing very well in the past 1 year or 2 years or so. Well, some people will say that the demand has softened, but I think you have to take this into perspective because the whole auto industry is not doing well, especially in China. So softening of the demand, I think, is quite inevitable. But whether the company has pricing power to actually push through all this to lower the price. As you can see, when Tesla lower the car price, the backlog decreases and the demand went up. So I think pricing power is something that's very underrated. And this actually helps the company to pass on the cost to the consumer when needed.
On that topic, Tesla just raised prices in the US for the Model Y long range by $1,000 because they're near zero inventory. And in China, they just raised prices as well for the Model Y rear-wheel drive.
That's good. That's good. And I think that these are things that, as an investor, you need to be level-headed about it, because during bear market or during such turbulent times, there will be a lot of news, fear, uncertainty, and doubt coming in, and a lot of conspiracy theory. Believe me, I think we have gone through that with all the theory that certain issues are ongoing with Elon Musk and all that. But I think we should always step back, don't jump to conclusion, and don't knee-jerk on certain news. Take some time to process through, and don't make investment decision based on quarterly reports. But instead, take a longer perspective view, say a year, right, and see whether the economic mode has actually deteriorated or growing.
So based on your research right now, what's your analysis on Tesla? Stronger, the same, weaker?
In my opinion, I think Tesla is in a stronger position than, say, 1 or 2 years ago because of their financial, and they are actually ramping up their production. You can see in their gigafactories. This will actually help them to have their economic of scale. So they are able to reduce their cost of goods sold, and hence their profit margin will go up as a result relatively to a year ago. So this puts them in a better position because we are actually transiting from electric vehicle, EV, to ICE. And this price parity between EV and ICE, when it reaches price parity, it will actually make Tesla in even a stronger position than a few years ago.
So the crazy thing is, people say EVs need to reach price parity with ICE cars. Yet in California, Model 3 and Model Y are the top selling car, selling at double the price of the number 2 cars, Toyota. So also makes us wonder, do we need to achieve price parity, or can it be like iPhone, where it's already priced way ahead of others, but because the value of the product is much more significant? How do you see this as an investor?
I see this lesser towards the price parity, but towards like how Apple, as a premium product, similar to what Tesla is having, versus, let's say, for example, the rest of the phone market, let's say Samsung. And so, if I'm not wrong, Apple holds about maybe 20% of the market share of phones, but 80% of the profit. So this is something that I envisage Tesla to be in, and with a lot of confluence of a lot of factors coming in, like the government promoting EV, giving rebates and all that, this will actually accelerate the transition to sustainable energy and will help Tesla move along on the right to it.
When you do all this research, in your state of mind right now, are you in a buy, hold, or sell?
I am definitely not selling. So when it is undervalued, in my opinion, I will start buying again. So I do not like to buy a stock when it is going up parabolic. So when it is coming down and it is below my valuation, then that was the time I will buy. So for example, I bought well, not at the lowest, but I think at those low points, like 100 over plus, $100, but not at the 101 or something like that at the bottom. But I think this is good enough for me. I don't need to buy at the lowest. I just need to buy near the low and slowly accumulate up as it comes down.
As a former trader, and for some people who may be hearing advice like sell, we take profits now, wait for the dip and buy again, what's holding you back from doing that?
Because I think there's a difference between trading and investing. So if you're talking about trading, I think it is you only sell, or I think that you only sell when the fundamental changes and when you have better opportunity or the economy mode is deteriorating. So that is from an investor point of view. But from a trader point of view, I would get in when there's let's say a change in the price action or some deteriorating or change in the technicals. So there's a difference between these two. So for me, for now, I'm just an investor. I'm no longer doing trading.
100% investor. One of the recent tweets you also have was, think of your decisions in life as a punch card where you can only make 20 punches, irreversible.
Yes.
So with that mindset, you got 2 other stocks in your portfolio. Tell us about your thought process. How do you pick it? And do you pick it independent of Tesla, or the fact that you own Tesla influence the other two stocks?
Okay, firstly, I think having Tesla as a benchmark is quite high because it's very hard to find let's say a 200 billion market cap company growing at more than 20% a year with very good ROE and all the financial metrics. We did screen it before, and the only company that came out of it was Tesla. So that was one. The other thing is that I like to buy companies that I think has the potential to be multi-baggers. So one of the few criteria for a multi-bagger, in my opinion, it has to be founder-led. So the founder-led, the way he govern or the way he runs the company will be vastly different because it could be less of a for profitable and more maybe for some mission driven like what Elon Musk is doing. Yeah, that would be one of the first few criteria that I'm looking at.
So the founder led, that's how you think about picking those two other companies. Tell me more.
So the other company is also founder led, which is Palantir. And this is a very controversial company with a very controversial CEO. You know, he dressed like Albert Einstein with his frizzy hair and all that. So this is but I kind of trying to understand Palantir, but not as much as Tesla. Hence, my portfolio allocation is different. So it's more towards Tesla. And this Palantir is something that I see because they're actually gaining customers in this economic downturn. And the customers that they're gaining are, for example, today, they gain a customer on Beyond Meat. So this company, Beyond Meat, is actually loss-making on all metrics, and yet they are willing to spend money on Palantir. So this is something that I think I should spend more time to investigate why they are doing this. So, and not just that, I mean, you understand about Ukraine and all, even the US government are actually using Palantir. So these are the thought process that goes through. There isn't like a fixed framework for me to do it, but as I research into the company, this goes through my mind and help me to actually choose and select the company that I'm interested to invest in.
I'm curious. Many Tesla investors anticipate a Starlink IPO and want to invest. So when you talk about Palantir and how Ukraine using it, nothing for Starlink right now. Are you already having some initial thoughts about investing in Starlink in the future? What's happening?
Yes, so to be just a fun fact, actually, Palantir does provide service to Starlink in their satellite constellation. So for Starlink, I need to take a look at their financial statement because to me, investing in a company there are two parts to it. One is the business, the other is the valuation. So if the business is doing well, but the valuation or the price is too high above the valuation, hence overvalued, I will not buy. I'll wait till it drops till undervalued by a certain margin, right? Depending on how much I understand the business, then I'll go in. So for Starlink, it's a very attractive business, but it could be overvalued depending on the financial numbers that comes out. So I'll make a decision there and then.
Fair point. Gwyn Shotwell just shared that Starlink should be on track to its first profitable year next year. What's the biggest learning you've learned as an investor in the recent months?
My biggest learning, I would think, is investing is like understanding my own self. It's a journey of self realization. So during this course of investing, this journey, I have actually, firstly, I understand myself more. I used to be maybe sometimes very quick to make decisions and often make wrong decisions. So for now, I learned to be more calm and not to be so emotionally affected, not just in investing, but in life as well. So this actually helps me in many aspects. And also in relationship with others, how not to jump to conclusion when I see something, to be less judgmental on the way something happened, and I will not, take a quick action to it. It also relates to kids. So for example, if my kids is very cranky today, not to, just scold him, but try to understand his maybe what happened to him today and try to understand him and educate him in a more disciplined way instead of like a very emotional type of parenting.
Like that, there's a saying I came across. Your kids are not giving you a hard time. They're having a hard time and they need your help. What's one thing that you expect to learn as an investor this year?
this year, I think the market could go either way. It could go, back into the bull market, or it could drop down back into a bear market. No one actually knows. So I think the learning point I could get is whether my strategy of concentrated portfolio, whether it will work out in the end, because no one can tell the future with certainty, right? There is always a risk when we try to predict the future. But I believe in investing, we have to actually depart from the crowd to be different so that we can get sizable gain. Otherwise, maybe investing in an index like S&P 500 would be, just a better option to go. And then coming back to your question on this, I think during this journey, I realized that a lot of phrases by let's say Warren Buffett, for example, be fearful when others are greedy. All these are actually amplified during a bear market because you can see who are actually greedy when they are fearful and who are fearful when they are greedy. So this actually brings me into more areas for me to explore and understand myself in this year and maybe the subsequent years in my journey in investing.
On the Tesla side, this was amplified with one of the investors, Jason DeBolt. He sold his house or mortgaged his house when Tesla stock was $100 and bought it in. That was truly when everyone was super fearful, price would go up to $20, and he went, I'm doing it.
Yes.
And
And
that's
now,
not you?
I wouldn't sell my house for sure. I wouldn't sell my house that I'm staying in for sure. If
Yeah.
let's say it's a second property, I don't know, I need to ask my wife, but that I wouldn't go all in into a particular stock.
Yeah.
But I really admire Jason DeBoat's conviction. It's not the first time he did this kind of thing, and I think he's well rewarded. But I think everyone's situation is different, financial situation is different, the commitment is different. So I think as an investor, we should not just follow someone. We should make our own independent thinking and then decide what we want to do with our life, with our investment, with our money, and with the experience that we'll get from all this.
This is a journey. Steven, thank you for sharing your journey with us. The hope is every year or so, you come back, we see how things have evolved. Everyone draws different conclusions as well. Sometimes we are a victim of our own consequences. If we are a successful trader this year, we may feel trading is very successful. If we're a successful long-term investor, we're holding the right stocks, we may think that's the right strategy. Adam Khoo was recently saying that he's tried both trading and also long-term investing, and the returns are roughly the same. I think everyone needs to go through their own journey. I think you've also made a tweet recently how conviction cannot be borrowed.
Yes.
Yes. You got to build it from within yourself.
You can borrow stock idea from someone, you can copy someone, but the conviction, I believe, cannot be borrowed, and that will only be very strongly displayed in a bear market, which is, for the last 1 year or two. So this is something that I think everyone has to go through. I think with my there's another point I want to make is that actually the bull market, right, it's actually born out of pessimism, and it climbs slow stairs up, and it's never born of optimism. So this is something that we have to be aware of. Whether it is a bull or a bear, we just do our own independent thinking, and the way stick to the plan and keep to our strategy. I think that's important.
I agree. Let us know how you have grown as an investor the past year. Whether you're a trader, whether you're a long-term investor, whether you're a mix of both, that is okay. If you found this video useful, please click the like button. Click subscribe to stay updated to more interviews like this. Thank you. Bye-bye.